A real estate agent who knows the ins and outs of VA loans can make a big difference for military buyers. The VA wants veterans and service members buying homes that are move-in ready. That doesn't mean a fixer-upper is impossible with a VA loan, but they can be much more challenging. When you're searching for homes, a VA-savvy agent can point out defects and conditions that might be problematic for the VA appraisal process or for VA lenders. Now, it's important to understand that property condition problems don't mean a home is automatically out of reach, but some issues will need to be repaired or addressed before your loan can move forward. That means sellers or buyers may have to spend additional money up front to keep the deal alive. It can be frustrating and expensive to get it under contract on a home, pay for a home inspection, and even an appraisal, only to find out the property falls short of VA or lender guidelines. At that point, you have to decide whether it's worth it or even possible to move forward. Here are 6 major considerations that you and your real estate agent should be on the lookout for when you start the house hunt. Number 1 is condo approval. Condo developments need to be approved by the VA. Your lender or a real estate agent can help you determine if a development is already on the approved list. If you fall in love with a condo development that isn't approved, your lender can ask the VA to approve it, but understand that process can take months to complete and isn't guaranteed to succeed. Another red flag is unique property. Think of things like A-frames, log cabins, and even properties with a lot of acreage. A VA appraiser will use recent comparable home sales, also known as comps, to help estimate the value of a home. In the case of unique properties, the appraiser may have trouble finding similar homes that have sold recently. Lenders aren't likely to consider financing a purchase without at least one good recent comp. On a similar note, watch out for properties that have any income-producing attributes. Things like working farms, outbuildings with shops, or even horse barns can all be problematic. These are really a case-by-case basis, so talk with the lender in more detail if you're looking at a home with any features that could be used to make money. Number 4 is be wary of homes sold as is. These may come with a bargain price tag, but they often have serious structural issues or deferred maintenance that the seller doesn't want to deal with. If an inspection or an appraisal turns up problems, these sellers aren't likely to cover the cost of any needed repairs, so you'd either have to pay for the repairs yourself or move on to the next house on your list. Number 5 is rehab work. This one probably sounds a little strange, but any rehab work done to a home can be a red flag. You'd think that making improvements is a good thing, and it is, as long as the homeowner got the proper permits from their local government. Not all renovations and home improvements require a permit, but if the seller failed to get a permit for work that does require one, you've likely got a headache on your hands. The seller may need to get those permits retroactively, which can be time-consuming. Look for the proper trail following any big home improvement projects. Number 6 is finally be on the lookout for any structural or system issues with the home. Cracks or other foundation issues can seriously affect the structural integrity of a home. These can also be expensive repairs. Working heating and cooling systems will be required in most parts of the country, and the roof will need to be in good shape and have sufficient remaining economic life. Now, none of these issues has to be an automatic deal breaker, but they'll all need to be addressed before your loan can close. So what happens if you fall in love with a home that isn't move-in ready? You're not necessarily out of luck. VA buyers can ask the seller to make repairs to get a home up to par. Buyers themselves are also allowed to pay for repairs, even if the issue is related to one of the VA's appraisal requirements. Often it's more a question of whether that's a good use of your money, or whether the seller will even allow the fixes. With foreclosed properties, for example, many banks won't allow you to make updates before the loan closes, and that can be a deal breaker for VA loans. Different lenders have different policies when it comes to buyers paying for repairs. If you're interested in a fixer-upper or a foreclosure, communicate early and often with your real estate agent and your lender.